Hi, good morning everyone. Just as all speakers before, I would like to start by extending mine and CME Group's thanks to the conference organisers, the China Gold Association, WPIC, Anglo, and all sponsors for putting on this incredible event. Thank you in particular to Mr. Wei Bing Deng for hand-holding me to get here to Shanghai this week, and I really do appreciate the opportunity to speak about CME Group's platinum derivatives market. Now, I'm going to start with a little story. Platinum is clearly a very important metal to everyone who's here at this conference, and I'm certainly no exception. The last time that I was in Shanghai to specifically talk about CME Group Platinum was about 5 years ago in May 2019 at a conference which was, I believe, is now progressed and morphed into what is now the Shanghai Platinum Week. And in May 2019, I was on the verge of asking someone to marry me. And I remember having many discussions with people at that conference, and certainly those at the WPIC, who really recommended that I get a platinum engagement ring and wedding band. And I listened. And I went and I paid my platinum premium at the jewelry store. As Mr. Benny mentioned earlier, that really is a great business. And here I am 5 years later, happily married, with 2 young children, and I really do think that the platinum rings were the thing that started all of that. So Trevor, thank you very much for your advice 5 years ago. I do have to now add a brief disclaimer. I'm not going to go through all of this, but as an exchange operator, nothing that I say today should be construed as any type of trading advice. Okay, CME Group. Who are we? CME Group is actually the combination of several different exchanges which are listed here on this slide, CME, CBOT, but from a metals perspective, it is really the last two which are important. COMEX, which is actually where the majority of metal derivatives at CME live, but really for today it's NYMEX. NYMEX is the home of CME Platinum and Palladium derivatives. CME Group is the world's leading and most diverse exchange. We have presence in over 150 different countries, and metals is one of 6 major asset classes that the group offers exposure to for hedging risk management needs. In terms of the metals business, this is an overview of the broad family of metals that CME Group have futures and options contracts listed against. And of course, we're here to talk mainly about platinum today. A fun fact, I think usually when people hear CME Group or COMEX or NYMEX, the first metal that most people think about would be gold. And the fun fact here is that platinum is actually an older contract than gold at CME. Platinum has existed at CME Group since 1956, a full 18 years before even CME Group Gold was launched. Now, one thing that I take huge pride in is how important Asia is for the overall metals business at CME. We are a US exchange, but with global presence. Metals, out of these 6 major asset classes, is in a really unique position in that Asia is such an important part of what drives our overall volumes and revenues. So, again, I'm going to compare where our business is now versus 5 years ago when I was last in Shanghai to talk about platinum. And what is very clear, I hope, and actually will be much more clear on the next slide, is that Asia, in terms of overall volume, contributes a lot. This year, volume volumes that originate from Asia Pacific on all of our metals products, and I will highlight that this is even higher for platinum, but for all metals products at CME Group, Asian participants, Asia Pacific participants contribute over 15% of the total global volume. 15% might not sound like a lot, but trust me, for a CME Group market, it is. That is a very, very high concentration of business that originates from this region. So let's talk specifically about platinum. NYMEX Platinum. Platinum overall in our metals portfolio is the fourth biggest product. We have gold, which is quite far away on its own, trading about $70 billion notional every day. We would have copper after that, about 20 billion. We have silver after that, about 12 billion. And then platinum, which this year we're seeing absolute record volumes for our business, and actually by quite some distance. So in terms of the long run growth, if we go back to 2010, NYMEX Platinum was trading just under 6,000 contracts every single day. Fast forward to this year, and we're trading just over 33,000 contracts a day. That's 1.6 million ounces of platinum trading daily on our exchange. In terms of open interest, so the essentially, I guess, the AUM of our market, how many positions are held open on the NYMEX Platinum market? In 2010, that number was around about 35,000 contracts, or 1.7 million ounces. Fast forward to today, and that number has grown to 84, just under 85,000 contracts, so about 4.2 million ounces of platinum. Again, to highlight the regional importance of this market and really to illustrate where the growth has come from. So, as I mentioned, this is really a huge year for us, and it's the reason why it's so important and exciting for me to be speaking here today. 2024 is looking like a very, very different year for our platinum market, even compared to just last year. So we have seen growth from all major regions. We tend to split up our volume by the major continents in the world. As you can see, Asia, this year compared to last year, is a clear outperformer. We have seen 83% increase in volumes on NYMEX Platinum futures this year compared to last year. The other important thing, arguably more important I would say, than where is the volume coming from, but when is the volume coming from? And volumes are, I wouldn't say useless, but they are not as useful if you can only trade a particular market and risk manage your exposure at certain hours of the day. So what we do at CME is that we look at when the market trades. And if we take the volume that is executed in platinum futures between market open, which is for most of the year 6 a.m. local time, until 6 p.m., so really Asia and the London morning, around about a quarter of all platinum volumes are executed truly outside of US hours. So again, for a CME Group product, this is a very, very high percentage. There is liquidity around the clock in our platinum futures contract. I'm just going to go into a couple more slightly detailed measures of liquidity in this market. So what this chart shows, so again, volumes is one thing. We can have many volumes trading every day, but a very important thing is how much does it cost to get in and out of these positions. If you have a huge bid-offer spread to pay to get in and get out, it of course adds to the cost of executing these positions. So this chart shows hour by hour. So that scale on the bottom is hours in Singapore time. So midnight all the way through to midnight the following day. It gives you what the bid-ask spread is in terms of ticks. So basically 2 here means 20 cents per ounce. You can see that actually from 5 years ago to May this year, the general bid-ask spread across the entire trading day has remained remarkably consistent from 5 years ago to now. and that bid-ask spread is also extremely consistent across the time of day. So liquidity conditions that you would find right now at 12 o'clock local time would be extremely similar to what you would find at 12 o'clock PM London time, which would be extremely similar to what you find at 12 PM New York time. Another measure of liquidity would be how much of these contracts can you actually execute? What size can you get for these types of spreads? So again, we have seen a really marked improvement from 5 years ago until now in terms of the amount of order quantity that is available for you to execute. So in general, you would be able to execute anywhere from 100 to 200 ounces to that 20 cents per ounce spread. And if you are willing to accept a wider spread, maybe up to 40 or 50 cents per ounce, you would be getting anywhere from 750 ounces to 1,000 ounces of liquidity. Who trades our market? The short answer is a lot of people. The great thing about being such a large and diverse exchange is that really so many people are our customers. So this is, I believe, one of the most recent reports from the CFTC, which shows the breakdown of who is holding our positions. So you have these three major categories: managed money, which would be investors, hedge funds, asset managers; producer, a little bit of a misleading name. Producer really means the physical market. Producers, mining companies, refiners, also the consumer side, and then swap dealers that maybe tend to sit in the middle of those two flows, so typically the banks. So these three segments tend to make up the majority of open positions in our platinum market. So a quick slide in terms of comparing the futures world to another way of accessing liquidity in platinum, which would be the ETFs. There are a lot of differences. One of the first differences would be leverage. The world of futures is a margin product, so that it is not the full value of the underlying asset that you pay up front. It is just a fraction of that called the margin. So right now you would typically pay about 5% of the underlying notional of your position to access the NYMEX Platinum Futures market. Another thing would be trading hours. We are almost a 24-hour market. We're actually a 23-hour market. Our market is closed from 5 a.m. to 6 a.m. local time and open and available for trading all other hours. That is a stark difference to the world of many ETFs, which would only have liquidity at certain parts of the day. And then to illustrate the difference of the size of our markets, in terms of daily turnover, notional turnover, as I mentioned, we're at about 1.6 million ounces worth of platinum that trades every day on the NYMEX, and that is about 100 times or even more than the nearest ETF in the market. And in terms of the overall notional that is held, the open interest, or the AUM, we sit at about $4.3 billion US, whereas the largest platinum ETF would be about $1 billion US. So many different ways that you can access exposure, investor exposure to the market. You have futures, you have ETF, you have physical investments, and I just wanted to use this slide to highlight some of the key differences between our market in the futures space and some of the cash instruments that are available. Moving away a little bit from liquidity, things would not be as smooth for us if we did not align ourselves with adjacent marketplaces in platinum. And we've just heard from Dr. Joju representing the LPPM, and I've highlighted here a few key events that we have had in our world over the last 4 years in terms of making our market more closely aligned with the OTC market. And making sure that these markets are ultimately more fungible is a good thing for the overall marketplace. It enables the freer movement of material from point A to point B. It bridges that gap between adjacent marketplaces, between the physical market and the investment market. So just to go through them quickly, one by one, and apologies for looking at my phone, just remind me which one is which in English. So 3rd of May 2021, responsible sourcing guidelines. we adopted alignment with the LPPM's responsible platinum guidance. 1st of August 2022, expansion of our chain of custody. What is the chain of custody? Our contract is physically deliverable, and we have a very strict set of rules about what platinum is eligible to be delivered into a CME group vault. And essentially we have our own list of approved vaults, and what we did a few years ago was essentially expand that list to include LPMCL clearing vaults, as well as vaults in Zurich operated by UBS and Credit Suisse. So actually our chain of vaults from which we will accept material into our designated vaults in the New York area has actually been expanded for platinum to increase the amount of potential deliverable supply we would have into our market. Later on that same month, approval of LPPM brands, so a much closer alignment between the refiners that are good delivery for both the LPPM market and also the NYMEX Platinum futures market. And then finally, our most recent improvement, I should say, would be bar size. So our platinum contract is actually a 50-ounce contract, but very recently, just a few months ago, we have made a change to our rules whereby now we actually accept the delivery of larger bars. So from 55 ounces all the way up to the 6 kilo bars. Just very quickly, CME Platinum is just one part of 4 major precious metals markets at CME, so a quick chart to show the overall volumes that we see across gold, silver, platinum, and then palladium. You can maybe see a small sliver of green at the top of the charts. But in general, this has been a year for metals. Our business has experienced extremely strong growth across all the 4 major precious metals, and the PGMs are definitely leading the way. And finally, to end, just a sample of some of the things that I was talking about earlier with regards to liquidity. So a sample trading stream of our futures market showing some of the different expiries, and then some of the rolls or the switches or the calendar spreads in terms of the markets that are available to roll your position from one month to the next. So to sum up, really amazing timing to be here to talk to you about what has been one of our fastest growing markets this year. Thank you again for the invite. If anyone would be keen to learn more about our futures market, please find myself and my colleague Michelle, who will be around at the conference for the rest of the day. Thank you very much for listening.